4 months ago, I shared 3 setups inside of the Elite program. One setup was on Disney, one on LVMH, and one on Bank of America. 4 months later, those trades made us a cumulative profit of 250%. In today's video, I want to share with you some Elite program insights, the reasons for why we decided to enter those trades, where we took partials, where we had our stop losses and take profits, and how those trades played out. First setup I shared 4 months ago, and I'm basically just sharing the chart with you, was on Disney. You can see I'm looking at the naked chart. I'm also looking at the monthly time frame. I do have no indicators and I'm not looking at fundamentals. Situation on Disney was pretty simple. You can see that Disney created a long-term support level exactly at this $85 area. We had a first rejection towards the upside in 2014, so a decade ago. We had a second rejection in 2016, a third rejection in 2020, and then you can see Disney started coming back down and once again was retesting this support level. We had a first rejection in 2022 and a second rejection in 2023. So it was pretty obvious that this was a very strong support level. Furthermore, Disney created this bearish trend line, basically just connecting those highs, the first high right here in 2022, the second high in 2023, and then we had another short-term rejection again in the end of 2023. Then we simply went down on the smaller timeframes. I cannot share the full entry rules with you, but we had bullish confirmation on the smaller timeframes. We were anticipating a breakout above this bearish trend line, so we simply decided to enter a long position on Disney. This was a very good risk to reward setup because you can see we entered roughly at this $90 level. We had our stop loss just below the previous low because this was such a strong support level that if Disney actually breaks below this support, we do not want to be in the trade anymore, and we are targeting the previous highs. This trade is still running, but we already closed out partials twice. We closed out partials exactly at this $105 level, and we closed out partials at this $120 level. If you're looking at this trade, it was basically a simple bounce away from a support zone. We had a long-term horizontal support level. We had bullish confirmation on the smaller timeframes, so we decided to enter a long position. That's basically it. If you break it down, it was simply a bounce away from a support level. Right now, Disney is retesting those previous highs. That's also the reason for why we closed out partials already a second time. So maybe we will see a short-term rejection away towards the downside. Maybe we will simply see a break above the resistance, but overall stops are at break even. Worst thing which could happen is that Disney now melts towards the downside, and then we will be out of the remaining position for a break even. But of course it will be an overall profitable trade because we already closed out partials twice. I played this position with options. Those options are now in a profit of 120%. And as you can see, I entered this trade November 2023. So 4 to 5 months ago, 120% in such a short period of time of course is quite nice. The worst thing which could have happened on this trade is that my options expire worthless. That's the trade we took on Disney. Second trade we took 4 months ago was on LVMH, ticker symbol MC. Again, I'm just sharing with you the chart which I shared 4 months ago. Situation also right here pretty simple. We had this rising channel where LVMH created resistance at this upper red trend line. First rejection was right here in 2021, second rejection in 2022, and then we had a third rejection in 2023. And then we had this lower parallel green trend line, first rejection towards the upside in 2022, and then a second rejection in 2023. And we also had this horizontal support and resistance level exactly at this 680 euro level. You can see this was previous resistance a first time, a second time, a third time. We had a break towards the upside. Previous resistance is of course turned support. So we anticipated the continuation towards the upside. Once again, we waited for bullish confirmation on the smaller time frames. We decided to enter this position right here in December of 2023. We had our stop loss just below this previous low, because once again, if LVMH breaks this support towards the downside, we do not want to be in this trade any longer and we will just take the loss. But so far, LVMH had a second rejection with this wick. Continuation towards the upside is now retesting the previous highs. We already took first partials, stop is at break even. So worst thing which could happen now is that we see a rejection away from the highs, tagging us out of the trade of the remaining position for the break even. But since we already took out first partials, this will be an overall profitable position. Top case scenario is that LVMH breaks above the previous resistance, targets the top of the channel, and you can see right here our take profit is at this $1,000 level, and then we will simply close out partials for a second time. I also played this with options. Options are in a profit of 60%. I also closed out partials a first time and I'm just letting the rest of the position run. Very important, if you do have a massive winner, just please let the rest of your position run, because you never know how long a bull market can last. And you don't want to close out at a plus 20% profit and miss out on a plus 80% move, which happens afterwards. Just keep this in mind. And the third position was on BAC, Bank of America, ticker symbol BAC. Once again, just the chart which I shared 4 months ago. You can see we entered this trade in December of 2023. And also right here, situation was very simple. We had this overall rising channel formation, a first bearish rejection in January of 2018, and a second bearish rejection in October of 2021. On the other side, we had this lower parallel support. First rejection in 2016, so also right here, almost 10 years ago. Second rejection in 2020, and then a third rejection in October of 2023. You can see again, no indicators, no fundamentals. I was just looking at the chart. We also had this bearish trend line right here, which was forming a triangle formation. We were anticipating a breakout, and we had this horizontal support and resistance level, which you can see was exactly at this $25 level. We had previous resistance, which was then after the break turned support, then again resistance, and again support. We waited once again for bullish confirmation, indicating a reversal towards the upside. Then you can also see on a monthly time frame we had a move of plus 15% within one single month, which is always a very bullish sign. And then we were also about to break above this bearish trend line right here. So we decided to simply enter a long position. What we did, pretty simple. Basically, we just had our stop below the low, because also right here, if BAC breaks below the low, we do not want to be in this trade anymore. So far, BAC melting towards the upside. Last month up another 10%. We closed out partials a second time, considering that we are now approaching this previous resistance. We closed out partials at this $33 level, and now we closed out partials just last week at this $38 level. Overall, it's still a bullish market. Worst thing which could happen right here is that it melts back to break even. Stops are at break even, so the rest of the position will be closed out for break even. But considering that we already closed out partials twice, it's already a profitable trade. You can see all 3 of those setups are taken without any indicators, no fundamentals, just technicals and confirmation. That's the beauty of trading the higher time frames. Also on BAC, I basically traded this with options. Options are now in a profit of 100%. And making 100% in 4 months, of course, it's not everyday business. It happens every once in a while. Keep in mind that we also do have losses, but the past 4 months just have been insanely strong. All trades are melting towards the upside. That's the beauty of just having an overall bullish stock market, because then you can massively outperform indices. Of course, as always, if you want to follow along with all the things I do on a day-to-day basis, you can go ahead and click the first link in the description, go to basictrading.net and sign up for the Elite Trader program. You do get lifetime access to my personal trades, which I will take in the future, and the trades which I am already in. And you can also go ahead and sign up for my free trading newsletter. If you have any questions regarding this video, leave them in the comment section down below. And as always, I'll see you next week, and never forget to keep your long-term vision.